Before you file your LLC paperwork or rush into creating a corporation, stop. Choosing the wrong entity can cost you thousands in taxes, liability protection, and headaches down the road. And in this video, I'll break down exactly how to pick the right structure for your business, step by step, so you don't regret doing it later. Have you ever wondered whether you should just form an LLC because everyone does it? Or maybe you've heard about S-Corps being better for taxes. Or you've seen big companies go with C-Corps and thought, should I be doing that too? Well, today we're going to cut through the confusion and give you a clear roadmap for choosing the right entity for your business. So step one involves understanding the main entity options. The first entity type is the sole proprietorship. And at the end of the day, this is the easiest because you don't have to file any paperwork. However, you don't have any liability protection when the sole proprietorship is sued. Now, this is a great entity for people who cut corners and avoid taking all the risks. And I sincerely hope that this is not one of you. The next entity type is the general partnership. This is similar to the sole proprietorship because there's no filings, but it's for 2 or more people who want to set up a business together. There's no paperwork, but there's also shared liability when the general partnership is sued. And this is especially dangerous when there's no agreement in place. The next type of entity is the limited partnership. And this is an entity that requires 2 partners at minimum. One is the general partner and the other is the limited partner. Now, unlike the general partnership, limited partnerships offer liability protection for its limited partners. But when the LP is sued, the general partner faces unlimited liability protection, which is why they aren't great in many situations. The next entity type is the LLC, or the limited liability company. Now, this is the most popular entity type, and this is because they offer flexibility in how they're owned, managed, and taxed. This is because they could be taxed as sole proprietorships, partnerships, or they could elect S-Corp taxation if they so choose. Now, unlike the sole proprietorship or the general partnership, they do offer liability protection when your business is sued. And this is the best choice for small business owners who want flexibility. The next entity type is the S-Corporation. Now, I should mention that it's not an actual entity type. However, it is a tax election. And with the S-Corp, they offer pass-through taxation, and you get to avoid the double taxation that C-Corps face. Here, if you have an S-Corp, owners can pay themselves a reasonable salary and take distributions on top of that to save on self-employment taxes. However, S-Corps do have strict requirements. Its owners must be U.S.-based, they must have fewer than 100 shareholders, and they can only be owned by individuals and not entities in most cases. Now, moving along to the C-Corp. Again, this is another tax filing, but with the C-Corp, the company is technically a separate taxable entity. And with that, you're subject to 2 levels of tax. One is the corporate tax rate, which is 21% right now. And the second is if there's any shareholder dividends that are paid out to the shareholders, they face a second level of tax at their individual rate, which can be up to 37%. Now, the C-Corp can be nice because it allows for unlimited shareholders, it's easier to raise capital from investors, and it's required if you want venture capital investment. And this is best for startups looking for big growth and outside investors. Now, with all of these entity types in mind, let's move along to step 2, which are the factors to consider before you choose your entity type. The first factor, of course, is liability protection. Now, do you need to shield your business and personal assets from lawsuits? The answer is yes, just because we live in a very litigious society. And with the LLC and the corporation, both provide a liability shield for when your business is sued. However, to have that strong shield in place, you need to respect the corporate formalities, which include having a separate business bank account and signing contracts in the business name. The next consideration relates to taxes. With the sole proprietorship, general partnership, and limited partnership, you have a simpler tax structure. However, if it's not done right, you could be subject to higher self-employment taxes. With the LLC, they do offer tax flexibility, and the benefit here is that you can switch to the S-Corp later to minimize payroll taxes. Now, S-Corps are nice because they do offer tax savings. However, they require you to set up payroll, have good bookkeeping, and make sure that you're compliant with all the IRS regulations. With the C-Corp, you have a lower flat corporate tax rate of 21%. However, you're subject to double taxation. Sometimes this can be beneficial if you reinvest profits, but if you're a small business, you may want to stay away from it. The next thing relates to administration and compliance. With the sole proprietorship and the general partnership, there's minimal compliance because you don't need to do any filings with the Secretary of State. With the LP and the LLC, you're required to file annual reports and you may have to pay small annual fees to the Secretary of State. With the S-Corp, you're going to have to pay payroll, you're going to need to complete certain IRS filings, and you also have shareholder restrictions. With the C-Corp, it's by far the most complex. You're required to have bylaws, annual meetings, a board of directors, and more paperwork. Now, you should do them for the C-Corp, but you should also do them if you have another entity instead. With the C-Corp, there's just additional burdens there. The next thing relates to future goals. If you're staying small and local, an LLC might be best for you. If you're planning to scale and hire more employees, the S-Corp can help save taxes once the profits are consistent. And if you're seeking investors and you want to raise venture capital money and potentially go public, the C-Corp is usually the best option here. The next thing relates to state-specific rules. I should mention here that LLC laws vary dramatically by state. Some states are expensive for LLCs. For example, California, if you have an LLC there, you have to pay an annual franchise tax of $800 a year. And on top of that, there are other states like Wyoming and Nevada, which are more affordable options, and they offer better protection through the charging order. Now, when it comes to C-Corps, Delaware, Nevada, and Wyoming are popular for them due to their business-friendly laws. So with all this in mind, I know it's a lot, but we're moving along to step 3, which is the step-by-step process to choose the right entity type. And in order to do so, you're going to need to ask yourself a few questions. First, how much liability risk do you face? Second, what are your tax needs right now and how will they change in the future? Third, do you plan on staying small or do you plan on scaling big in the future? And fourth, what is the simplest structure that you could get away with while still protecting yourself? Now, in most cases, an LLC will be the ideal structure just because of the flexibility it offers. But before you choose the right entity, it's still best practice to consult with an attorney and a CPA, even if you end up deciding to form an LLC. Choosing the right entity is one of the most important decisions you'll ever make for your business. Get it wrong and you might overpay in taxes, lose liability protection, or potentially scare away investors. Get it right and you'll save money, protect yourself, and set yourself up for future growth. Now, if you found this breakdown helpful, hit that like button, subscribe for more legal and business tips, and drop a comment with which entity you think fits your business best. And if you still need help making a decision, our team at Corporate Direct would be happy to speak with you regarding that decision. You can schedule a free 15-minute consult by clicking the link in the description below. Once you schedule a consult, you'll be talking to a knowledgeable human being who'd be happy to guide you through the formation process.